Okay, let's take a look at this case study from AUDUSD from December 27th. I wrote here, won't take this next confirmation and will wait for manipulation. However, there's a small chance that it's already occurred. Now, when we're looking at the setup, we can see, in fact, that this manipulation did occur. We see that we had these equal lows, and the lows don't have to necessarily be equal, but they can be right very close to each other, that happen to sit right above this area of demand. That is a huge sign that there's liquidity here and that the market is going to come down to try and sweep that liquidity to then draw the market back up. Okay, so let's talk about how we identified this in the first place. If we're looking at the naked chart AUDUSD, it doesn't really look like anything, but you want to be able to identify a trending market. That's the first thing you want to be able to identify. The best way to identify a trend is to look at the highs and the lows of the market. So we see that we're having higher lows and higher highs. And because we have these higher lows and higher highs, this tells me that we're in an uptrending market and we can look to buy in this market at any given level of interest, at any level of point of interest. So in order to see and identify what supply or demand levels we're looking at, the first thing we need to see is we need to see impulses of price. We need to see these aggressive impulses of price here. And if we have these, this is what tells us that we will have an area of supply or demand sitting at the bottom of it. So right here, what we can see is we have this area here, right? We see this surge upwards, but right before that, there was this push down. You want to catch that peak, the peak candle of these zones. So that last push down before the push up, and that's where you're gonna look to be getting into your trades at. So I play this, and we can see how the market came close to that zone once, and then it came close to that zone a second time. And so that right there is good signs of liquidity buildup, accumulation, for the market to have orders to collect the liquidity from, because these big banks and billionaires, they cannot get in and enter into the market unless there's enough liquidity there. So we need to see these type of movements in the market engineered for traders to be able to buy. So there's other traders, there's probably 100, 200,000 traders that see this low and say, okay, if price comes back to this low, this area of support, I can buy. And look, they were made to think that they were correct. However, what did the market do? Came back down, stopped them out. Now there's power behind this move. Now we're on a 5-minute time frame. We wait for our entry confirmation, which right here we just got a bullish engulfing candle. This is where we would get in the market and press buy. Our stop loss goes half a pip below the low. And our take profits, remember the market moves in levels, and I always use the bodies of the candles, close and open, for these levels. So these are the points to where I would be looking to exit the trade if the market rejects this price point. If it decides to go beyond it, then that's great. And I will just close whenever the momentum decides to reverse. Your goal is to get in the market, take what the market gives you, and get out. So we let this trade play. And I believe that I passed up on this first entry and I took the next one, right? And I would have done that anyways, because at this point before the market was reversing, I was only up 1-2. So because I was only up 1-2, I'm still likely holding this trade. I usually am always holding unless I was up 1-2.5. It's rare scenarios that I'll take it out at 1-2, unless there's a reason like price is reaching a very significant reversal point. Then I'll definitely be sure to close. However, what happened here is this: we seen this impulse happen from this area here that broke structure, and because we had that gives us a new demand zone, and this is an area that the market can come back to and play off of. So what I would do is this: I would wait and see what happens when the market gets to that zone, right? And the only reason I decided to wait for my profits to retrace away is because I didn't hit my minimum target. If this touched 2.5, I surely would have been closing once I started to see this reversal. But I'm back in this trade. What I want to see is this, right? Now that I'm in this type of profit, I'm up 1 to 2.4. This next candle will probably put me up around what I need to be. Look at that, 1 to 2.67 right there. So at this point, I'm ready to close this trade as soon as the momentum decides to go the opposite way on me. So I drop down to an even smaller time frame so that I can get out sooner rather than later. Usually going to be the 2 or 3 minute time frame. And I just want to wait for the market to reverse. Once I see that momentum dying down, I'd be getting out of this trade. And so this is one of those scenarios where I actually would be getting out close to 1 to 2 because I mean, I already hit this high. Market doesn't have to the market can do anything when it reaches a level. It can hit the craziest reversal you've ever seen, or it can blow right past it. You never know what's gonna happen. So if you're in that pocket of return of 1 to 2 or 2.5, you shouldn't hesitate to close your trade if you see that the market is deciding to retrace on you, because it can, if you try and hold, the market can do whatever it wants to do. Let me have a look at that. Even let's say you did keep holding, right? Let's say you did hold because you didn't have your 2.5. You would have had this order block right here. And like I said, as long as price doesn't close with 2 or more candles beyond that, it's still valid. If you were still holding, you'd still be in this trade right now. And you'd be exiting. Take a look at that. There's momentum dying right there. We have a red bar. I'm on the 2 minute time frame. This would be exiting the trade, and this is perfection. This right here is perfection, right? The momentum died. I have at least 2.5 that I'm walking away with. I'm happy. I'm satisfied. That was my goal. I can get out. All right, and this was that trade. And here's your full picture. Okay, I'll catch you guys on the next one.